NFTs aren't just about how can a game make more money from you potentially. It's about how can they get closer to you and keep you spending more time in their world.
100%. Yeah, games only care about three things: acquisition, monetization, and retention. And giving players ownership of assets boosts all three. You can acquire players more cheaply because instead of spending $1 billion on Google Ads, which is what the biggest games in the world do, or Apple, or Facebook, you spend that directly on the players by giving them value for coming and playing your game.
3, 2, 1,
Hello, folks. We are back with another episode of Between Two Layers. I am Carly Reilly, coming at you from Miami, where I am at Art Basel. Robbie, you want to say hello, introduce yourself? Not that there's anybody listening who doesn't know who you are.
Hello, Robbie Ferguson coming at you from Sydney. Not as exciting as Art Basel.
Oh, I'm in the States. I've never been to Australia. It's pretty exciting to me. We got so many good topics today. I think we're going to probably kick off talking about the IMX token unlock. I think there were some fears going into that, and I was frankly impressed by the outcome. So we'll talk about that a little bit. The year's progress for ImmutableX. Talking about macro broadly, I'm always so interested. Robbie, you just have such smart takes about everything. So really looking at kind of the year ahead and what do you expect from the macro perspective, how ImmutableX is thinking about building in the bear, how you're approaching that. We might get some Call of Duty conversations going on here about the latest launch they've had and about Web3. Is Web3 impeded by Apple and Google? And because it's having a hard time going mobile. So we'll get into all that in just a minute. But I do have to ask folks, if you are watching this on YouTube and you want more of this great content, please do hit the subscribe button, subscribe to the ImmutableX YouTube channel. If you are listening to this on a podcast app somewhere, go ahead and hit subscribe on the podcast app. It makes a big difference in terms of getting this content out to more people. All right, diving right in then, Robbie. This ImmutableX token unlock, I was seeing a lot of apprehension of people being like, oh, you got these big holders who are getting their unlock. The price is going to dump. What's going to happen? And in fact, I think quite the opposite actually ended up occurring, which was there was no dumping and the price ended up going up. Can you talk a little bit about this for us?
Yeah, this was it was a big process for us. We took it really seriously. I think it was a combination of making sure we talked to every big holder of the token. So we spoke to sort of the nearly half of the token holders. And of them, basically more than 90% said, hey, we're going to hold. And the awesome thing was to see that not only came true, but more people held than we expected. And actually, people out of that bucket we didn't even get a chance to speak to ended up majorly holding as well. So I'll share some stats on that, but I think it kind of has shown through how everything has moved. And the second thing is we obviously got some new holders to come in and cover any other supply that was going online. That was Coinbase, that was King River Capital, that was Kinetic Capital. And overall, I think it was extremely well handled, an extremely positive signal. And also the one major token unlock that we had is now gone and behind us. So I think this is sometimes, you know, the best pieces of news are the things that you don't particularly hear about. And I think that was one example of them where everything just went really, really smoothly. So yeah, I think grateful to all of those holders, obviously. And I think the reason that we ended up with those results is just the sheer amount of traction that Immutable's achieved over the last year, and also that the Web3 gaming market has just grown by is pretty enormous. And I think we've got a lot more to do.
So let's step back and talk about the year's progress. What's going on? Why do you have so many folks who are so bullish on IMX and reflected in sort of this token news?
If you look at the overall year, there's been the biggest year of progress for Immutable since its inception. And it's always been pretty fast paced, but start of the year, we were just under 100 people. We're now more than 300 full time, and we're 100% focused on Web3 games. At the same time, Web3 gaming as a category has ballooned from 2 years ago, less than $500 million invested in it categorically, to today that was invested last month. And there's been more than $14.5 billion invested in this category over the last 2 years. It is one of the fastest growing nascent tech categories in the world. And
I think 200 million invested last month in IMX in blockchain gaming.
More, I think it was closer to 400 even.
Last month.
Yes.
Like in the heart of the bear market, I'm at Art Basel. It's like parties are definitely quieter than usual, and you have $400 million being poured into blockchain gaming.
Yes, yes.
That's
And look,
crazy.
I'm not saying, I think the fundraising absolutely will slow down. Like that is the market we've gone into, but it's already been invested. You know, this has been such a significant allocation of capital and also talent, most importantly, from exceptional Web2 gaming studios where CEOs, founders, I mean, the CEO of Riot Games Asia dropped out to build a MOBA on Immutable. Like, these are pretty insane funnels of talent pipelines over to a new category. And I think it's because people have seen this precedent happen before. They've seen it happen with a shift from box sets sales to free to play. They've seen it happen with the shift from desktop to console and then console to mobile. And people want to be ahead of this next wave, particularly one that isn't just a new wave of monetization or distribution, but of incentive alignment and actually empowering players. And I think that's the fundamental philosophical difference. Once you go through this one-way door of believing, well, hey, Web3 gaming is better for players, it's better for users, and it sets up a digital property precedent that means everyone can own their stuff, it's pretty hard to go back from that. It's pretty hard to say, actually, no, I think people should be screwed out of $200 billion every year based on items they get rented in the database. You just feel bad about that. And when the most important changes have happened structurally or to disruption, they've all had at their heart a mission that people fundamentally believe is good for the world. Otherwise, you cannot have that longevity of dedication or the level of retention that you have when people come and join this industry. So a little bit off track, but I think that's why Web3 gaming as a category has grown up quite quickly. The elephant in the room is these games are not yet out. There's very, very few games live. I think we're going to start to see the first ones. I mean, even, Alluvium is launching 2 games, which is probably the most anticipated over the next couple of quarters or so. So I think we'll start to see that change pretty quickly. And amid that backdrop of Web3 gaming becoming one of the hottest markets in the world, Immutable has moved from what we estimate to be rank number 5 for market share for winning Web3 gaming deals to rank number 1. We have moved from having 2 marketplaces to more than 13. All of these incredibly meaningful, sort of large deals with marketplaces that bring liquidity to our global order book and bring demand to any game launching on our platform. GameStop, Aqua, Nifty Gateway, Wearable, Token Trove, etc. We've gone from 5 games signed on the Immutable platform to now nearly over 100 meaningful games that are all highly funded and have a shot on goal at being a multi-billion-dollar volume success with tens or hundreds of millions of players. And that ramp has happened exponentially. So in the last quarter, we won more gaming deals than every other quarter in Immutable's history combined. We expect that trajectory to continue. So I think we've been fortunate. We said at the start of the year, the most important thing we could do is invest in the best possible product to allow gamers to own their digital assets and games to build this for them, but also to go very, very hard on go-to-market in terms of helping to onboard these games, helping to support them post-signature, which I think has been a key differentiator for us. A lot of other L1s or L2s out there are saying, well, hey, we'll give you some grant incentives, come sign up on the platform, and then they basically just leave them. And that's not the position the category is in right now. It is so difficult to create the user experience, sustainable economy, and game design from scratch that these games require in order to be successful. And we really try and invest in that. We have a larger post-sales success team than we do a sales team. And I think that is kind of putting our money where our mouth is in terms of how we want to support our customers. And we also had, of these games, a whole bunch of big brands. We had Disney, DC Comics, Alluvium, Embersword, Imbu, GameStop, some of the world's biggest brands and marketplaces, all deciding to build on us. We have 2 AAA games building us today that are currently confidential that we'll be able to share over the coming months. And we also did the largest ever Web3 gaming sale of all time in the middle of the bear market with Alluvium, where they sold $72 million of land in 2 days. So I think there's been a lot of progress on the product side, which I'm pretty obsessed with. Even last week, we launched Bits. And we've done all of the volume that we've done today, which is consistently the most NFT volume out of any L1 or L2 in terms of number of trades and between number 2 to number 3 for the actual dollars traded. And we've done it all with limit asks. So only people being able to say, hey, I want to sell this Gods Unchained asset for $10. Do you want to buy it? And now we can have people come and say, with no gas fees, I want to bid on an asset for 50 cents, for $1, and start to really build liquidity through that. So I'm extremely excited for what Bits are going to do for demand and price discovery for assets on the platform. I know it was one of the major flaws of the more valuable assets are, the more you require these bids in order to kind of be generating liquidity. So I'm really excited for like high value collections like Illudium Land. That's a lot. The final thing I'll say is enforceable royalties. So, I mean, enforceable royalties for us have always been a selling point. But up until 2 months ago, they were a vitamin. They were nice to have, something you might take. Now they're absolutely a painkiller and a big differentiator in when we're winning or losing enterprise deals. Because the whole point of Web3 and Web3 gaming in particular is that you can create brand new methods of monetization for your game. You can still be a successful game publisher, but now those methods are incentive aligned with end players. You're building a positive sum, value accretive economy that might work via you not selling that much in primary sales. So Hearthstone would no longer sell massive hundreds of millions of dollars of card packs, but give them out and they monetize via secondary transactions. And their goal is to grow the economy. And the reason they can do that is because they have guarantees over their ability to take royalties on those ongoing transactions. Taking that away undermines a much better business model for players and gamers. And Immutable is the only protocol that can support at a protocol level enforceable royalties today. So if you're the generator of an asset, you can stream to multiple parties fees that can always be kept no matter what marketplace they trade on. And if you're the marketplace, you can also have guarantees for those fees. So that became a really, really important part of our product by what's happened with X2Y2 and LooksRare and OpenSea and Magic Eden over the past couple of months. So yeah, it's been a massive year for us.
Yeah, it's a lot. What I hear you saying there that I think is so interesting, or I think I'm hearing you saying is like some of your gaming partners have put this front and center as being really important to them. I think, me maybe being a little bit more outside the gaming world, we hear it a lot from artists and creators, which makes sense, pushing for royalties. But if you have even like kind of corporate leaning partners or gaming partners who you hear saying, okay, we like Immutable X because there's this royalty enforcement piece, that's really striking that you have all those different folks who are keying into this conversation.
Completely agree. And I think this has been one of the most important philosophical debates of NFTs. The sad thing is I think it never needed to be philosophical. I think all you need is to solve the game theory problem by allowing it to be enforced at a protocol level. And then you no longer have, hey, should I have to respect royalties or not? It's irrelevant. There's no commercial model on earth that works by people respecting something from a philosophy when there's a cheaper alternative. It just has to be built into the product.
Well, tipping, but that's because you're afraid of getting your food spit on. And so it's a little bit of a different psychological proposition.
Yes. And even there, I think it's just like an expectation that they can kind of enforce at the time of sale. You don't have that pressure when you're behind a screen trading. And it's also on a mill rather than these assets that are tremendously valuable. But yes, that is a good counterpoint.
Let's back up even further and talk just the macro environment. What do you anticipate for 2023? How much do you think FTX set this space back? I think there's divided opinions about this. Some folks being like, oh my God, he's done irreparable damage. And others feeling like, I don't think he actually hurt us that badly because people were already cynical or whatever the case may be.
I think there's a constant tension between custodial or centralized methods of onboarding people, whether they're centralized exchanges or wallets, that make the user experience very, very easy for people to get onboarded into crypto, but also are against the fundamental ethos of being able to own your own stuff.
Yeah.
And so it's this really interesting balance where I think exchanges like Coinbase have actually ushered in a huge amount of mainstream demand and facilitated kind of top of the funnel interest in crypto. But I think where we have to distinguish is they're not the infrastructure required to support use cases. They're really onboarding into kind of heavy trading and there are real risks associated with that, but they're not delivering on what crypto's value prop is when it comes to like actual ownership or actual decentralization, because you typically don't own your keys to your own stuff. They're typically not kind of provable on-chain collateralized funds, et cetera, et cetera, et cetera. And so I think what this has made very kind of distinct is, ironically, I think we'll see a reversion back to sort of self-custodial solutions, which we have seen obviously in the data since this has happened. A lot of people withdrawing from centralized exchanges and a lot of reduced trust there. It definitely also has a dampening impact on macro, but I think it may shift the power a little bit back to particularly for product use cases, people looking more at self-sovereignty as a core thing that's really valuable, or auditable, sort of provable on-chain collateral, if you're looking at that from a leverage perspective. So I think that's maybe the silver lining. I think definitely dampening impact on macro. This, we were seeing things kind of go up, and then this came in. Ultimately, I don't think it changes too much around what people are going to build or do. The biggest impacts will come from existential risk, which I welcome, but if it's done right, and that's kind of the key question there. I think the good thing for Web3 gaming is it's probably the furthest away from this category in terms of where people are looking. It's much more around the utility of what things are being done. And even for us, since day one, the goal was always, we are not interested in speculative assets. It's how do we take, and you can explain this stuff without even using blockchain. It's just, how do you take the $200 billion of games that are spent every year on stuff that people don't own and make them be able to trade or sell it for real value? And that exchange, that opportunity is going to be absolutely immense in terms of empowering people to own their stuff. So I think there's that side as well. And that's why I'm probably pretty bullish on Web3 gaming macro in the medium term, which is ultimately it's not reliant on what the price of cryptocurrencies is, or even people's faith in cryptocurrencies. All it's reliant on is, do we create a great game with tens or hundreds of millions of users, which uses Web3 technology under the hood to enable true ownership of digital value? And that going mainstream doesn't require a big investor to come in and say, this thing works, or the narrative on crypto this year is fantastic, or incentivize a bunch of liquidity farmers based on insane yields. All it requires is an exceptional product that gamers love to use and is fun. So I think that's why there'll be increasing decorrelation of Web3 gaming to crypto as a broader market, and probably why there's been so much interest in it in the first place as one of the first real use cases.
I can echo that, not from a gaming perspective, but I think my friends in DeFi were, I think, naturally more rattled by FTX. Not that FTX is DeFi, but nobody really expected that this was going on at FTX. And I think a lot of folks who are on the more financial side of things are feeling like this has really set the market back. Whereas when I sit in just general NFT world, IP world, even a little bit, not necessarily gaming, the brand partnerships have not slowed. The number of big brands getting into this space has not slowed. You've got Nike announcements coming out. You've got Disney behind the scenes working with a number of different companies and exploring all these opportunities. Warner Brothers, same thing, like on and on and on. And FTX hasn't seemed to phase them in the least, because it is a little bit removed from that. And I think you're right to say gaming's even the next level from there, because the value prop is pretty clear. And so it hasn't affected things on that level. What do you think just broadly in the markets? Like, are you anticipating, this maybe gets us into, I'd love to know how Immutable X and you are thinking about building during a bear market. What are you anticipating in terms of when the market picks back up again? Are you planning for a 12-month winter, an 18-month winter? Where are you at?
So I think there's probably a few ways you have to think about. The first is operational discipline and how do you spend cash. The second is culture. So how do you inoculate your team against this who may not have been through a bear market before? How do you inoculate your community and audience? How do you think about sort of your customers reacting and positioning this news to them? And the third thing I think is just, what do you stop doing? What do you start doing? What do you emphasize in this market? What becomes more or less relevant based on macro dynamics? And so I think the first thing is just Immutable is in a very fortunate position. We've done a massive raise at the start of the year. We have we have basically all that in the bank. We have more than 200 million US in the bank today, plus hundreds of millions of dollars in tokens on the balance sheet, and also many tens of millions of dollars in accounts receivable as well. We have no exposure to custodial exchanges. That was very deliberate. We had no market making exposure to people like Alameda, and we have more than 3.5 years runway. So the goal is, if we need to, if this is a very protracted bear, be in a position where we don't have to fundraise again, and we can just be successful based off building the company, because we want to be able to invest aggressively, and we plan to over this period, because what we've seen with Web3 gaming is that the long-term trajectory has increased in confidence significantly. There have been far more games we've been moving in than we expected. We've seen just one hit, Axie, do $4 billion in volume. And so it's going to be power law dominated. the biggest games will drive the majority of volume, and we really expect there to be multiple of those level hits over the next few years building on the Immutable platform. And that is alone more than a justification of the sort of spend we're making here. And then from a philosophical perspective, I think it's very important we're investing just as aggressively as centralized competitors who are trying to create this infrastructure, but own it with significant fees or with insecure technology. I think the second thing, and can't be overstated how important this is culture. So, I mean, Immutable was born into the biggest bear market in crypto in 2018. We started, and what this did is it forced us to create products that people really wanted to use, that really had tied value into games usage rather than to speculative value. You know, for Gods Unchained, it was all about how do we have cards trading at $1, and we created more cards for that game than every other game in crypto at that time combined. And so I think what's really important is that nothing is ever as good or as bad as it seems. One of my favorite quotes. During the bull markets, there's a bunch of money being thrown around. There's a bunch of hype. There's very poor signal to noise ratios. Fundraising is pretty easy, but also it's incredibly distracting. And it's important to constantly tell the team, as we do, this is just one phase in a cycle. It has happened many times before. It will happen many times again. As things grow and as we create actual utility, things will smooth out. You know, once gaming, 30% of it occurs via Web3, we won't have these crazy macro fluctuations, or we will, but revenues will remain stable and sort of traction will retain stable because of these actual product use cases. So I think it's very important to tell the team that. Likewise, in a bear, it's, hey, the best companies in crypto are built in bears. This is when we get the time to kind of obsess and focus on product and engineering, which kind of leads me into the third one, which is activities. And I think there's probably a few things, which is one, it's very important that we stay transparent with our communities, particularly when there's been so much opaqueness around sort of financial exposure or contagion to FTX Alameda. But narrative is definitely less important, you know, flashy announcements or things which are going to make big news are actually not as relevant in this market. It's really much more around who is actually building traction, market share, and developing a good product. And we've kind of always been focused on this, to be honest. If you look at the gaming deals that we sign, we never optimize for what's the flashiest thing. We're always looking at what will generate long-term volume. We weren't interested in short-term volume projects like PFPs because all we want are these opportunities to have big swings at the goal of how do we have 10 million plus players on a meaningful game where they're empowered to own stuff, and how can that have billions of dollars in volume and trading that empowers these players. So I think that's been a strategy decision we've made and we've kind of stuck to, and I think will serve us well through this market. And the third thing is that we're just going to become incredibly obsessive with product and edge and above all else in this time, because ultimately this is the perfect time to build the infrastructure. That means when the next bull market comes around, we come out of the gates as the leading solution for Web3 games, where they can build incredibly easily and to scale beyond gaming, even into new verticals, as we kind of take all unique value and tokenize it and empower people to have true ownership of it. So a few things there. And obviously it's pretty difficult if you don't have cash right now and you don't have revenues either. Don't have too much advice beyond reduce your burn as quickly as possible, as fast as possible. If you're listening to this advice, it's probably already too late. But it is really important to sort of have a look at operational discipline first and foremost, because the number one rule is don't go out of business. I think we're in a fortunate position where we can actually look at it, continuing to invest and continuing to hire over this period.
You say you're fortunate we have 200 million in the bank, but you know, there's only so much luck in that, and there's a lot of strategic decision making that leads you to that position. What were like your biggest signals where you're like, we're in a bubble or like a bull market that won't last forever, we need to make sure we're conserving for some cash that we can be in this position when the bear hits?
Yeah, and I'll add even, you know, we had an investor come in at this same valuation 4.5 months ago, so in the middle of this bear market. So I mean that's pretty unique. So I think we're definitely in a position where the progress the company's made has kind of offset a lot of the reduction in the backdrop and valuations as well, which is good for us. But I think the key thing for us is just how do we always be in a position of strength? so that no matter what happens to the market, we can continue to invest aggressively in what our conviction is, which is this is going to be the most significant change to how people own unique stuff. It's going to start with gaming, and it's going to move everywhere. And that makes it pretty clear that we need enough cash that if the crypto market goes into a hole for 4 years and there's no more fundraising available, we can just build out these use cases for 4 years. There's always a bit of timing involved, of course, but and always a bit of grace. So I do say fortunate because I think there's always a bit of grace involved, but of course, it was a very deliberate strategy as well.
Let's talk Web2 gaming for a minute, because though I am not a gamer, as I've said on this show before, I now am friends with a lot of gamers, and I feel like the biggest story coming out of the gaming world was the Call of Duty Modern Warfare 2 drop, which did $800 million in its first 3 days of release, which is just insane and so mind-boggling. And I'm curious to get your perspective. What are your takeaways from the Call of Duty drop and its success?
Look, I think it's fantastic. I mean, I have nothing against these games being successful, except that they're doing it by ultimately a system that is bad for players. And so the thing I just point to here is, if you look at the incentive system of games, and gamers know this, right? But the number one gripe of gamers is don't buy games pre-order, because it rewards developers for building crappy products that they then don't update over time. And it's ironic because the exact solution to that is create an aligned incentive structure where games' main incentive is to make the economies incredibly valuable over time. And what you've put your money into, incredibly valuable over time. It may not even be the same version of the game. You can't keep a game relevant forever in most cases. But it may be, well, hey, let's take these assets and pour it into a new one. Let's airdrop you value in a new experience based on what you've already spent money on. And it actually attacks the fundamental thing which gamers are unhappy with, which is they spend money and games have no incentive to reward that spend with long-term improvement of what they put that money into. The exact opposite is they only make money when they increase the utility of the assets that they've bought. And I think that's pretty cool. It's a pretty direct antidote and a good example of how something which is this massive can be done really right. I mean, imagine that money being earned from ongoing royalties on an economy that is continually growing and being invested in by these developers. You're going to have a very different attitude toward live service, toward updating, toward continual delight of sort of the end user experience as they build out incredible games, incredible universes of content around what people have spent money on.
My central thesis at this point on NFTs is that we are in the attention economy, and every brand, every creator, everything in the world is vying for your attention, and it has never been more competitive to get it and keep it. And against that backdrop, NFTs are such a powerful tool. We've seen it in this very value extractive sense in this market up to this point, but it's actually about value creation to ultimately let you kind of extract value, whether that's because people are buying more of your lattes or buying more of your t-shirts because they're part of your NFT community and they feel closer to you, or just because they're spending more time paying attention to your brand, which is what all brands want. So I think that's another interesting element to this. Maybe it really applies in the Call of Duty case, maybe it doesn't, but this isn't just, NFTs aren't just about how can a game make more money from you potentially. It's about how can they get closer to you and keep you spending more time in their world.
100%. Yeah, games only care about three things: acquisition, monetization, and retention. And giving players ownership of assets boosts all three. You can acquire players more cheaply because instead of spending $1 billion on Google Ads, which is what the biggest games in the world do, or Apple, or Facebook, you spend that directly on the players by giving them value for coming and playing your game. Hey, when you own an asset, I'll give you something that's valuable. When you share with the player to invite them, we'll give you value. And that isn't coming from nowhere. That is literally taking the billions of dollars that's otherwise spent on advertisers and spending it directly backing gamers for coming and playing your experience. And the fascinating thing, I think, is if you look at the trend of how we've priced games over time, it's gone from, I sell you a game for $80 as a box set, you go home and play it, to you come and play my game for free and you spend money on in-game items, to now we have games in China that are direct clones of other games, say Clash Royale clones, and they advertise themselves through cheaper in-game items that are identical. So you can buy your Hearthstone card, say in a clone, at 50% of the price of the real Hearthstone. The inevitability of this trend is like, pay people for coming and playing your game. Just create this value and align incentives. And then you have retention and monetization. Retention drastically goes up when you're an owner, not a renter, or not someone who is getting screwed over by the creator of that game. And when you have an actual stake in an ecosystem, let alone are you voting or curating or providing governance, your skin in the game increases retention massively. And this is something games obsess over and spend billions of dollars optimizing. Like typically when you create a mobile game, you spend half your budget optimizing the first 5 minutes of gameplay to see what is your retention after those first 5 minutes. And if it's good, you'll continue the game. If it's bad, you'll drop it. Like that's how important the attention economy is. That's how brutal this economy is. And the third thing is monetization. And people spend more when they can sell it later on. It's fundamental. How much would you spend on a house if you could never again sell it? So I couldn't agree more. I think this is not only right for players, but it's also commercially fitting with the trends we've seen over the last decade.
It's such a no-brainer. I mean, you're talking there and I'm like, are we talking about NFTs or are we talking about the housing market? Like neighborhoods where 90% of the homes are owned rather than rented typically are cleaner and, you know, better well maintained, et cetera, because the incentive is there for the homeowners in a way that it's not for renters. It's just such a no-brainer. Let's shift to our final topic today, which is, I'm curious to get your thoughts on the mobile Web3 experiences. To what extent not having necessarily robust mobile experiences yet is holding back this space, and to what extent not having robust mobile experiences can be blamed on Apple and Google and the mobile providers. And we can maybe get into some specifics around what Apple's been doing lately, but let's start broadly there.
Yeah, I've been saying this for a while, but you can't trust anything that comes out of the policies for these stores. And I don't say that in a disparaging way. It's just they have complete control. They can change it at any point in time. And so whatever guidance that we think we have, expect that it can be changed at any point in time to be much better or much worse for you. And so I think the most important thing is being at the coalface and having a backup plan. And that's why we build a mobile game internally, Guild of Guardians, so that we are at the coalface with our customers. We are understanding every single decision the App Store or the Play Store is making in relation to games, or the Epic Store or the Steam Store. And that means that we can have our strategies be shared with all of the games building on our platform, but also actually know what the plan is. You know, we can say, well, hey, you've said this, let's actually go and do it, and let's see if you let us, which is often the most efficient way to test the reality of these policies. I think the interesting thing is that it's actually quite divergent from previous precedents they've set. So typically, Apple's precedent is if you pay outside of the app, you can redeem value inside apps, but we're charging for the convenience of using pay and distribution. And so Spotify, you'll note you can't buy subscriptions in app. Same, I think, with Netflix, because they don't want to pay the cut to Apple. Instead, you have to go to netflix.com or spotify.com, and they can do that because they're very loyal customers. It's a high paid service product, and you only have one instance of sort of signing up with a payment. It's a recurring subscription. So that's very much worth it. They definitely do lose conversion by not allowing people to pay an app, but it's probably much smaller than what they'd lose in fees. What this policy now is you can't even buy an asset outside of the App Store and have it represent utility or be used as like a gaming character inside a game, which is a very different policy from what they've done before. And I think one that is very damaging toward ultimately creating convenience for people selling these assets. I think the go around right now is just pay the piper. And the good thing is there's certainty that we can pay the piper and have distribution through app stores, which is massive. But I think over time, we'll see increased pressure for people to be kind of purchasing assets outside of this ecosystem and be used inside it, because these are going to be incredibly loyal ecosystems customers where trading occurs in multiple contexts. So that's fascinating. And I think it just creates a huge opportunity as well for, I'm not going to say a mobile phone incumbent to be disrupted. I think hardware is pretty locked in, but I think other stores. So I think Play Store has an opportunity here. I think Epic Store has an opportunity here, which they've definitely been capitalizing on to be kind of friendly towards this Web3 universe. The other trend we're going to see is we'll see people building more desktop and more web-based games for Web3, particularly while there's uncertainty in the interim.
That's a fascinating point that I haven't heard anybody make about this weird move away from precedent. Like Audible, same deal, right? They always, you could only buy books or credits initially outside of the app. Now they've added inside the app. I think maybe they're just eating the fee. But didn't this really start on the gaming side? Like this was Epic's battle that they were driving folks away from the App Store and into like a different Epic experience. And that's when the lawsuit kicked off, because Apple was going to kick them out of the App Store for I guess it was Fortnite, right? And then Fortnite fought back. So it seems to be like kind of specific within the gaming industry and now extending into NFTs that they have this incredibly punitive policy. For those who maybe missed this, Apple has come out and said, okay, you can have blockchain or NFT experiences within apps on the App Store, which they were previously sort of dodgy about. But if you're going to do that, you must pay this 30% fee on transactions, and you can't even drive people to a website. You cannot drive people somewhere else to buy the NFT. They must buy it in app, and they must pay this 30% fee. Awesome. Well, Robbie, so much fun to catch up with you as always. We will be back in a couple of weeks, I think, just you and me again, or you and me and Alex to catch up on what's going on and do maybe a more hard-hitting 2023 predictions episode. With that, have a great weekend.
Thanks, Carly.